To your money, check the big board. We are down 62 points. Remember, it was a somewhat puzzling sell-off yesterday. We were down 200. At one stage, we were down 400. Market watcher Ryan Payne, the president of Payne Capital Management, is with us. Before we go any further, can you explain what on earth happened yesterday?
I think the market needed a little bit of a breather. Let's face it, we had the best start, first 2 months of the year since 1991. I mean, that's a tremendous move in the market upwards. At some point, markets aren't linear. You're going to take a break somewhere, and yesterday was that day.
It wasn't much of a break, but at the end of the day, down 200, that's not a huge break now, is it?
Exactly. Relatively speaking, exactly right.
Okay. Now, Alexandria Ocasio-Cortez, she
Yes.
rules the Democrat Party, and she's been ruling the show today, by the way. She's in favor, and she has co-sponsored a new Wall Street tax, a
Yes.
tax on all Wall Street transactions. What do you make of that?
I think it's a problem because you need liquidity in the markets. So you need traders, you need speculation in the markets to keep the money moving. So if you stop that or you deter that, that could be a real problem for liquidity, which could actually create more volatility.
That's interesting. Because
Yeah.
I'm jumping in because you mentioned liquidity. I think this tax is aimed and have a big impact, especially on the very fast trading, the rapid fire trading. I'm not sure what you call it, analog or computer trading. It would place a small tax on every single trade, which would make it prohibitive to do this super fast, constant trading. That's who it would hit.
That's exactly right. Right. And that's an important component to the daily liquidity of the market, which is extremely important. So you don't want to see those type of things go away, and you don't want to make that prohibitive.
Okay. Now, you have four factors which you say are contributing to the economy looking up.
Yes.
I'm going to go through all of them. I'm going to
All
focus on millennials.
Yes.
You say millennials are a big helping factor. Spell it out.
Okay, so when you think about the economy long term, right now, we have the lowest amount of Americans between the age 40 and 49. And the most productive years for Americans in economic terms are between age 40 and 49. Now, the oldest millennials are getting to be in their late 30s now, which is hard to believe, which I just missed the cut, but we talked about that last time.
Right.
But now, over the next 20 years, that's going to rise by 20% as millennials start to move into that 40 to 49 range, which is going to be their highest productivity years, and that's the largest generation right now in the U.S. So that's going to be a huge engine for economic growth. You know, when you think out all the way out to the year 2039, which is, if you think about that, that's a tremendous number.
What about millennials? You know, we're told that they don't buy houses. They don't. As they get older, their attitudes change when it comes to stock market and investing. How do we know that they're going to be, you know, contributing in that fashion?
The hard questions, Ashley. Yeah, no, it's a good question. And I think, you know, the thing about millennials is they were late to the game, right? They are starting to form households later in life, but It is happening. It's starting to happen, which means when you start to get into that household formation stage, that's when you start to spend a lot of money. You start buying homes, all the things that come with buying a home. You start to raise kids. So as a consumer, you know, that trend's already starting to happen. And if you think about it, you have like, depending on the statistic, you look like 80 million people that are going to be all starting that trend. It's almost like when the baby boomers hit the 1980s.
Right.
Yes.
It's going to be tremendous.
It's a bulge, isn't it?
Yeah,
I mean,
huge.
the
It's
millennial
a
generation is a bulge that will go through society. So in a couple of years, that bulge will be at its maximum economic productive time. That's
Bingo.
your argument.
That's my argument.
But you got to wait for that. I mean, that's a couple of years down the road.
But the trend's already starting to happen,
starting.
right? So you want to be at the beginning of the trend, not the end of the trend. And right now, you're already seeing that uptick happen. And we see it too. I talked about this last time. We have millennials come in our office every week now with hundreds of thousands of dollars in cash that they've just been sitting on because maybe they were living at home or they didn't get out of the house at the same time as you and me may have gotten out of the house, but they have a lot of money they're ready to invest. So that's all that money at some point is probably going to start finding its way into the market. We're already seeing that happen.
That's fascinating.
Very fascinating.
You have people walking into your shop with a lot of money in cash and youngsters.
In a bank account, let me reiterate, not in literal cash.
It's not a suitcase.
The IRS has a problem with that.
Where did most of them make that money?
Well, I mean, we have a lot of clients that are entrepreneurs. A lot of them are starting to move up the corporate ranks in different companies. I mean, let's face it, if you're in your 30s now, you've been working for, you know, at least a decade, more than a decade, you're starting to move up in the hierarchy of your company. So all these things are happening.
That is fascinating stuff.
Yeah.
You know, Ryan, you're all right.
I can't argue with it.
Even if you're not quite a millennial. That's good. Ryan Payne, good stuff. Thank you, sir. Appreciate it.
Great to see you.